Hello, welcome to this week's Forex Outlook here at xm.com. My name is Rafi Bayajan, currency analyst, and here with me is our chief economist, Michalis Florentjadis. So Michalis, it's been one of the better weeks for the US dollar. We saw a bit of a rebound since Tuesday, and it's once again retesting last Friday's high against the yen around 107.77 level. So what's changed for the greenback this week?
I think it was a week of modest strength for the US dollar. There wasn't really something terribly important to drive the dollar higher, but we have been getting US data steadily strong, so I think this is helpful for the case for more rate hikes by the Federal Reserve. And I think this has contributed to a rise in US bond yields or long-term interest rates. So this in turn is also helping to make the dollar more attractive. Risk sentiment has more or less also been positive. So stocks also had a positive week. There are some doubts whether the US administration would like a strong dollar, and I think that this trade rows and worries about the dollar policy are keeping the dollar a bit subdued, preventing it from rallying even further perhaps. But I think overall it was a positive week, as you said.
Now this risk-on sentiment, we saw the yen falling back as a result, and the Swiss franc, but particularly against the euro, the Swiss franc has seen some sharp losses. It's managed to breach that 1.20, the old peg against the euro by the S&P. So why is the Swiss franc looking so bearish all of a sudden?
Yes, it's very interesting that more than 3 years after the huge move by the Swiss franc, the huge appreciation, when in a space of a day we saw it rising from 120 to 1, so this was a stronger Swiss franc. Obviously, I think we are seeing the Swiss National Bank reluctant in giving any signals about a tighter policy. As you know, they have a quite negative interest rate. It's the most negative interest rate in the world at minus 0.75. And during a period when both the Fed, we know it has already started to hike, and the ECB hasn't started to withdraw stimulus, but it is making some noise. And I think you will mention that later because we have an ECB meeting next week. At the same time, nothing from the SNB, and also less of a need for safe havens, not as the Swiss franc, not a very popular safe haven at the moment. So yeah, quite a significant weakness for the Swiss franc.
Now, another poor performer this week is sterling. Sterling, in fact, actually was one of the better performers at the start of the week. It made a fresh post-Brexit high versus the US dollar. But then we had some UK data. We saw sterling falling rather sharply. So what else is driving the pound lower this week?
Yes, it's very interesting that it was a very important week for UK data, and all of the UK data came out negative or worse than expected. We're talking about employment numbers, particularly wages, inflation, and also retail sales. And to cap all of these negative developments, we had Mark Carney, the governor of the Bank of England, coming out and saying that it didn't have to be a May rate hike, that a rate hike could happen later or at a different meeting. So beginning to have to create some doubt in the markets whether there is going to be a May rate hike, which markets were pretty much expecting a May rate hike. So this was behind most of the pound's weakness. But we have to say the pound gains during the previous weeks were particularly impressive, maybe overextended, and this was a very good chance for traders to take profits. And having said that, having said all this, Rafi, what should we expect for next week? What are the important points that we should focus on?
Right, we're going to have two major central bank meetings, one from the ECB next Thursday and the Bank of Japan the following day. We're not expecting any changes from either central banks, particularly the Bank of Japan, but also the ECB. What could be interesting from the ECB is whether or not Mario Draghi in his press conference says anything about the recent run of negative data we've been having out of the Eurozone, whether it's going to suggest a slower and even more gradual withdrawal of monetary stimulus. Also, we're going to have GDP numbers coming into focus. We've got the UK and the US releasing their flash GDP estimates for the first 3 months of the year. And talking about the Eurozone data, we're going to have the flash PMIs for April coming out next week ahead of that ECB meeting. So that's going to be closely watched. We're also going to have some inflation numbers out of Australia and the US. We're going to see durable goods and that important consumer confidence index.
So I think it's important that we get the flash PMIs out of the Eurozone before the ECB meeting, and they're going to be useful in checking whether this relative weakness that we have had, this little bit of slowdown in the Eurozone economy, if it's going to show up in the flash PMIs. And for me also, I think preliminary first quarter GDP out of the US is going to be very key to see how the world's largest economy is performing. Thank you very much, Rafi. Thank you everyone for watching and have a great day.